Hey traders, this is Ron Haydad Financial. Hope you guys are doing fantastically awesome. This is the market outlook video for the week ahead. As I do the video right now, it's closing in on 6 p.m. Eastern here on Sunday night. So the market will be opening in about 20 minutes. And depending where it opens and where, by the time we get to 9:30 in the morning, a lot could change. This video tonight is going to be a little shorter. We're definitely not going 40 minutes. I got a cold coming back from my business trip from Florida. So I guess my parting gift was, hey, you're going to get sick from the plane or whatever. So if I sound a little off, that might be why. Now, before I go any further though, let's take a look at the disclaimer that everything is always for educational purposes only. It is not advice to buy or sell, and everything is always in a virtual paper trading account. What I want to do for you tonight is something different. With me being gone Thursday, Friday, and Saturday, there was 2 days I was watching the market, but I really wanted to see where we ended the week. Would there be massive pullback? Wouldn't there? If we were going to be up good Thursday, then Friday I figured we would have some sort of pullback, and that is what happened, but it wasn't much. Very, very strong here. So something different we're going to do tonight is on the left, we're going to do a weekly chart. I'm sorry, that's my cold talking. On the left, we're going to do a daily chart, and on the right, we'll do a weekly chart. So this is 1 year daily. This is 3 year weekly. So each candlestick is 1 week. Each candlestick is 1 day. And what I was taught, what I would teach you guys is you don't always need to have quote confluence and agreements of dailies and weeklies. It's okay that they're not. But when they do align, in theory, from technical analysis standpoint, it makes the trade idea that much better than just any old trade idea when you do have that confluence of dailies and weeklies, different time frames that are matching. If you hear people trading futures or day trading, they might want the 5 minute, the 15 or something all in alignment, all going in the same direction. We could sort of say the same thing here. So if this is a lot and you're saying, whoa, I'm looking at 2 charts here, this is a little crazy, it's okay. We're not going to do this every time. I just haven't done this in a very long time. And I thought with me being gone for 2 days and given the pullback down and then the rip higher, I thought it would be a good time to just revisit this. So I hope you find it helpful. Just really quickly here on the daily charts, if I zoom in, the red line is the 20-day EMA. That's just a short-term trend line. The ones we want to pay attention to, especially the big one, is the orange. That's the 50-day SMA on the daily, and it's a 50 period on the weekly. The yellow is a 200 on the daily, 200 on the weekly. So if we look at the daily chart here, the S&P 500, we have 50-day, 100, 200, and these are Bollinger Bands as well. We were here, and in 1 day, we went from here all the way up to here. It is very difficult for markets. Individual stock is one thing, but the broad market to jump above 2 institutional moving averages in 1 day, unless they're literally laying on top of one another, like peanut butter and jelly. There was some space here. This is a very, very big deal. Because this gap is so big, I have this sneaky feeling, this niggling. We're going to come down and we're going to fill that, I think. Ask me a percentage, I literally think it's 50-50. We may not. We just might keep going, and that's okay. So how do we trade that? How do we think about trading that on a weekly basis? Here's what I would consider. Here's the 50. We need to stay above this. If you're a bull on the daily chart, because the 50-day SMA is such a huge institutional moving average, you're bullish when you're above it, you're bearish when you're below it. Very binary. We give that back on a closing basis, this instantly, the 200 and then the gap fill. You quickly go boom, boom, and back down we go. And we're going to fill that gap. I think if we fill that gap, very good possibility we do a U-turn. Now, we may continue higher here for a period of time. We might go higher right through earnings season, which I expect to be very, very good again. And it might take us another 6 months to come all the way back down and fill that gap after we have a nice big fat rally, because you do get corrections along the way. So my point is this, we may not fill the gap, or we might. Well, duh, that's 50-50, right? But the tell is this. This is what I'm trying to drive home. Watch the 50. Now, I'm going to be doing this for you when I do these videos, and I'll be putting a video out if that were to happen. But we get below there and you're thinking, oh no, we lost the 50-day moving average on the daily chart. What does that mean to us as traders? I'm like, whoa, heads up, gap fill. Be very, very careful. It's probably going to be news driven. We're not just going to wake up and say, oh, there was just a little more selling today. It's not how that usually works. There's going to be something to drive it, and then price just magically goes down and fills. I mean, it could stop at the 200, but at some point that'll eventually get filled. And they often say that gaps get filled. So where does that leave us flat out on the daily chart? Over here on the left side, we are above the 50-day. We're above the 100. This is bullish. Friday's price action is basically irrelevant. A little bit of a down day. Whoop-dee-doo, who cares? It was an amazing week. It's been a really strong 2 weeks for the bulls. The 2-week bounce. Over here on the weekly chart, remember I told you guys last week when we got on a weekly basis on the spiders, we got back above the 50 period on the weekly. Remember I told you that is bullish. The weekly chart is already bullish. Now we just need the dailies to come along. And that was 2 weeks ago, so it means we were down here. Once we cross the 200, we're going to be bullish. And then we had the ceasefire news, and you go from here all the way up to here, and you actually clear both in one fell swoop. Again, highly unusual. It does happen, but it's very, very rare that it happens like that. So weeklies looking long and strong. They look fantastic. The dailies have now gone bullish too because you're above the 50 and you're even above the 100. The 50 is more important than the 100, but you're above both. Bottom line, SPY's bullish. All that to say, the SPY's bullish on both time frames. How about the equal-weighted S&P, RSP? We had some trouble here right at the 50. Got a little above it Thursday. Friday we finished down. It is not bullish on the daily chart because we're below this 50. On the weekly, you hit the 50 weekly and you've trampolined off it. So the weekly looks strong, the daily not so much. The daily is probably going to catch up to the weekly here, given how good the weeklies look. The only really bad thing about Friday's weekly volume on the RSP is it was on the light side, but big whoop-de-doo. We're still going in the upward direction. Once RSP regains the 50, then you're going to have alignment. You'll have alignment here with it above the 50 on the weekly, and you'll have it above here. Target then, there's some unfinished business at a gap fill, and then you would go back up here. But to be clear overall, the bulls have the edge here. I'm just given the gap. Wouldn't be surprised if we come back and fill it if we get that bad news. But keep an eye on the SPY more so than the RSP here. Let's take a look at the Dow. A daily chart. The Dow was above the 50 on Thursday. Now the 50 in orange and the 100 in white are pretty much together, almost like peanut butter and jelly laying on top of each other. That creates confluence. You got above both on Thursday. That was important. And Friday you gave it back. But Friday's volume was really, really light. So if we get above the 50, why would we go down on Friday? Would be a question. And the answer is, well, you were all the way down here. The bulls made such progress. They just gave a little back. It was because you're walking into a weekend and things could change due to geopolitical and war news. Total sense for short-term traders to take profits on a Friday. Absolute total sense. And what was the level of conviction in that selling pressure Friday? You would then look at the volume and say, oh, it's pretty puny. Didn't look like the bears really had a lot of confidence. And if you're new to trading, the answer is no, they did not. That volume is so pathetically low. This was just trimming. That's all this was doing. I don't care that the size of the candle might be a little bigger than you might like. It's all irrelevant. There was no volume. If you want to play it quote unquote a little safer, you would let this get back above the orange. But the weeklies look good here already. If you're looking for a stop, you definitely do not want to go back into this gap because you go below that low on Wednesday, and then you would come down here pretty quickly. So again, the safer play you would think is let it get back above the 50, which isn't much, and then you're going to have both in alignment. This weekly chart of the Dow is very impressive. Back-to-back strong weeks closing near the highs of the day. It looks very, very good. Let's look at the Qs. Again, daily, weekly. Zoom in. We got above the 50 on Wednesday, got above the 100 on Thursday, and you totally dojied on Friday. Bit of a pause. Yet, they were still green. But they weren't red, green. These people that bought in here, they're getting their money back. It's natural to just have a pause. So the fact that it's a doji, big whoop-de-doo, you're above the 50, this is important. Look over here. You're all the way back up here on the Qs and the weekly. Both these guys are bullish. Zero problems here. How about MDY? Higher risk index, the mid caps. Here you were. We talked about their outperformance. Then comes Wednesday. Thursday, Friday. Friday's the red. So Friday you were here. There's no problem with this. Friday's volume was not high. If anything, maybe it drifts down to the 50. This is still bullish. You are outside the Bollinger Bands, 3 straight days. Friday, you're actually inside it, but essentially it's 3 days outside. You're just pausing. There's nothing wrong here. You come over to the weekly and say, well, do the weeklies look bad? You're like, oh, heck no. You got near the 50 on the weekly, and look where you are. You are all the way back up there. You're literally not that far. I mean, a decent up candle from going right to all-time highs here on a weekly basis. MDY is bullish both time frames. Absolutely both time frames. So MDY was doing good. Remember we talked about Wednesday before I left? We talked about how the stocks, before Wednesday, we talked about how the semis and the MDY were the last two that hadn't fallen. They were still holding up. And then Wednesday I addressed that with the big move, and look what these guys are doing. This is a reason why when folks will ask me my opinion, and my opinion is no different than anybody else, it's a dime a dozen. But what I was taught over the years are, if your higher risk indexes are outperforming, it's the little tell at the poker table, the confidence level of what's going on. And with the semis and the MDY doing so well relative to the others, this doesn't look like a full-blown panic sell-off. Now, frankly, I was hoping they would, but we never got it. And I said, if we do get negative news, they will come for these guys. They will tank them. It is inevitable. It's just what happens. Even during tariffs, it is what happens. And by the way, look where they were at the tariffs, and then look where they went, almost 2.5 times where they are now. We get the move, and the stocks hit all-time highs on Wednesday, and I commented on that. Can you believe we just went to all-time highs, just like that? So now the question is, will we get an update Thursday? Thursday comes, we gap up near the highs of the day. Friday comes, now you have more late chasers to the party, gap up, close in the upper half of the candle. Look at the weekly candle. You don't see many of them. For an index, that is epically big. That is a monster candle. You would expect that to be a red candle going in the opposite direction for how tall that is, how deep it is. Bottom line, guys, the stocks are incredibly bullish. This is why I think between now and the end of the year, we're probably up 20-25% minimum in the indexes. If the semis were really worried about, the poop hitting the fan all over the place, we're not going to see MDYs and we're not going to see SOX doing so well. And they are. No guarantees, but it's the old tell at the poker table, just like it was literally 4 trading days ago, a week and 4 trading days ago when I was highlighting how they couldn't completely break these things. They did break the SOX on the daily on 330. They finally crushed it. The bears had no follow-through. They were so weak and pathetic. I mean, this thing should have come down here, probably break it. Nope, ripped it right back up, higher than it even was the day before, and then boom, 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 and then it just goes. This was the shakeout. They broke the 100-day in white, shaking the lemmings from the tree. That's what that turned out to be. Yeah, that rhymes. Now let's talk about the daily chart. We are extremely overbought. 3 consecutive days. I would think we're going to come back and do some backfilling. Look at the weekly. Now, if you want a fun little project, if you have time on your hands, you can make these charts go back 1 year, 2 year, 3 years. And when you have these kinds of penetrations to the upside of upper Bollinger Bands, you go back and look, and you're going to find out that they come down, and they come down. I would expect a pullback, but here's the flip side. Just because the Bollinger Bands, 95% of the data's got to be within those bands, doesn't mean it has to be tomorrow, and it doesn't mean it has to be Tuesday. Maybe by Wednesday it gets there. So we actually could see significantly higher prices in the short term, but you're betting against the casino now. The odds are historically are very much against you that this can keep going. But if the shorts got caught wrong, which they have, remember we were talking about the CMTs chart and how they were, according to Zero Hedge, they were heavily short. They're now, from what I read, net buyers in all scenarios. Remember I was telling you guys the market generally doesn't reward, quote, everybody being right. And they were right for like another day or two, and then boom, rip your face off and it's all gone. Now these guys actually have to go buy. I don't know if they ever make any money. They always seem to be a little too late to the party. It's like the last ones that get on the train, headed to the old blue light special. So Now they're going to end up, it's going to add fuel. But if there's negative news with Iran or negative news somewhere else, of course we can pull back. But this is so risk on. It is impressive. With all that said, I think we should see a little pullback here in the semis this week at some point. No guarantee, but that would be an odds bet. How about IGV? These guys cannot catch a break. We've been talking about in these videos how the bounces have been very lackluster on the daily chart. So if I zoom in here on Indigo, George, Victor, these SAS stocks, SAS, we tried to rally. We can't even get near the 50. We couldn't even get near it. They were like, any bounce, they're just selling. Look at the tops of these candles, these wicks. Down, 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 down. Everything's down. Every time we get up, they want to be like, out of here. Get a little more money out of here. So now the 50's all the way down here. You're trying to put a double bottom in, and then you try to rally. We talked about this Wednesday. You gap up. And even though the market was ripping on Wednesday, they closed them red. I mean, not only that, that was bearish engulfing. And then plop, plop. Down you go again. On the weekly basis, you get below the 200 period on the weekly. Yeah. I mean, once you did 3 weeks ago, now you're just staying below it. This is bad. I know AI has literally taken their lunch, but there is just no sign this stuff is done. Somebody asked me, where do you think they can go? You literally have to go to a weekly chart. So we're going to stay over here and say, well, the last consolidation point was around 66. Another 10% lower maybe. There's a reason like Salesforce and HubSpot and these guys are getting absolutely, whacked. Let's look at mags. There's a lot of newsletters that I see with the headlines, and they keep, selling fear and how AI is dead. They just have no idea what they're talking about. They just know that, fear sells and it gets you to click because it's negative headlines. I do not think AI is dead. I think NVIDIA, which we're going to look at here soon, this type of consolidation is still incredibly bullish. We'll see how that ends up playing out. But if we look at the mags here specifically, they were down here. They've made a lot of progress. They are, as oddly enough as this is, the 50-day. So on Friday when I was in meetings, I was just peeking in on the markets, but I didn't peek in on technical analysis. I was just looking for headlines and seeing who was trading what, or where stocks were trading. Were they up big, down big type of thing? I'll catch up on the weekend. So I wanted to see how will Friday end up being. Well, look what they did do NVIDIA on mags on Friday. They closed it right on the 50. So they wouldn't let it get above it. Interesting. They closed on it. But over here on the weekly, look what happened. The weekly's now above the orange. The weeklies have triggered bullish before the dailies. It will only take the mags just a little bit more. I mean, we're talking like 50 cents more, $1, not even $1. Yeah, like the 25 cents to 50 cents more. Because they would be getting above the 50, they would then trigger a buy on the daily. You already have the weeklies triggering a buy because they're above the 50 period. The only thing else you could wait for here on the weeklies would be for it to get above the 20 period on a weekly basis. But my guess is if this thing starts pushing up a little higher, then this thing will be closing above 62 on the weekly. Then you have it crossing the 50, crossing the 20. Now it's call it double bullish. But the fact the weeklies occurred, the moment this thing gets above the 50, you're talking pennies now, would trigger a buy, a technical buy signal. Let's go look at XRT. Retail, keep an eye on retail. There's lots of negative news out there. The sentiment is bearish. These things aren't getting crushed. They're down, but they're not crushed. On a daily basis on XRT, look where the 50 and the 200 are. They're literally kissing. They're on top of each other. We get above both, this goes on a buy. You already have it above the 50 on the weekly. So once you get above here, XRT goes bullish, and it's basically front running what they think is going to happen over the next 3 to 6 months. The market's usually looking out in advance. So we want to keep an eye on retail stocks. It heads up, you're starting to see those buy signals emerge. You look at energy on the daily. You lost the 20 over here about 6-7 trading days ago. Now you're at the 50. For any bulls, there's no perfect technical analysis, but if we get below the 50-day here, then XLE has lost the final straw of momentum. The first break is below the 20, the next is below the 50. And you're seeing here on a weekly basis, this thing is now starting to crash hard on a weekly. Profit's going to come out if things begin to settle down in the Middle East. Real quick here, NVIDIA, look how it's perking up. We broke down below this trading range. It was like the last fake out, and now they're buying it right back up. You're back in this range. Start setting alerts around 195. We close above 195 on the daily. This is a breakout. And then you just literally had 10 months of consolidation. If you don't know what that's like, that's base building. And here comes we need the catalyst, but the next leg is super powerful, is the theory. Very powerful up leg is the possibility because they can't crack it even though they try. On a weekly basis, NVIDIA cracked the 50 over here. It broke those lows, which is the same box here. And now you're right back up. This is looking good. Looking very strong. Palantir. Other direction, I hate hammers at support. I call them rubber hammers. That's a support right here. Don't like it. Just be very careful here. There's nothing bullish on this chart. Just please don't take that hammer as true. Now, of course, I tell you that, and then this hammer is going to work, and you're going to be like, Ron, you said don't pay attention to it. There's no guarantees. But if you're with me a long time, it's something I learned a very long time ago. Hammers at support generally are not, they're not just not as valid. Maybe it gives you a heads up to be careful on the bearish side, but for new bullish trades, I wouldn't touch it with a 10-foot pole based off past probabilities, past results. They just don't work that well. Maybe this time it does, but usually what happens, you get a hammer and then it just ends up breaking. Before this thing would turn bullish for me to feel good about it, we'd have to get back above the 50, but I would not be touching that just because a hammer appears. On a weekly basis, you're below the 50 and it's all the way down here. The weekly is supportive of this bearish stance right now. Real quick, let's just do gold and silver because now I see the video is 23 minutes. I want to close this up. My voice is starting to get bothered. So here's GLD on a daily chart. You're still sandwiched between the 50 up here and the 200 down here. This is no man's land. On a weekly basis, it's actually bullish, but the daily, you're just sandwiched. There's nothing here until I get a breakout for momentum. Talk about long term. Do I think they're buying opportunities? Yeah, but not short term. Here, you're basically right at on the 100. You're playing back and forth. Again, you got to get above 50 or come down here. It's just in the middle of no man's land. And then we'll end with the miners. Here's GDX. You are above the 50. It's technically bullish. You're back above the 20 period on the weekly here. You're bullish on both daily and weekly time frames right now. If we lose the 50, I would go immediately neutral. So I hope this helps. 24-minute video. I'll cover more this week. You guys have any individual stocks you want me to take a peek at, just send me an email at care@financial.com and I can give you an educational view and a virtual paper trading account. And I'll take a peek at it for you. I wish you guys a fantastic week ahead, and I will see you in the next video. Thank you for watching.